Suppose you sit in the interview, suppose you want to change a career, then your skills and knowledge will take you over there. Auto sector is also there, but you can move from Maruti Suzuki's valuation to the Ola Electric, which is recently listed, not profitable and struggling with to manage the operate.
Top 5 mistakes which people do while doing this entire valuation.
So first of all, like linkages issue, like three statement model, like their capex is showing something and their debt is showing something else. Three things if you say, then I would say focus on everything, not only numbers, what client provided the data. Take some time, go through that. If you have any question, come up with the questions. Another thing is learn from your mistakes. Like right now, you know, like AI is the
Correct.
Talk of the town. There are many AI tool, cost, discount rate as well. I'm not talking about ChatGPT and Gemini. I'm talking about some of the tools which are specifically building the entire model and also doing the valuation.
What recruiters notice first?
Communication skills.
Advice to valuation aspirants?
Look for the long-term growth.
What makes a CV stand out?
Your experience and education you can convey in just one page.
Hello guys, I hope everybody is doing good. Hi, this is Ganesh Nayak. I help finance professionals and students to excel in their career and become better versions of themselves. And I also help students preparing for competitive exams in finance. And as a part of that journey, I meet with a lot of people from the industry trying to understand what is happening in different roles, what skills are needed in different roles in finance, and also how to make an awesome career in finance. Okay, with that, I'm talking to Siddharth Jain. This is my second podcast with him. And we're going to be talking about different rules that he has done till now. We're also going to be deep diving into valuation and transaction advisory because he's currently working as a VP for valuation and transaction advisory. As a student, what steps anybody should take to learn valuation, learn equity research? We're going to be also talking about that. So Siddharth, first of all, thank you very much for taking out time. For our audience, if you can give a brief from the start of your journey till now, what all things you have done.
Definitely. First of all, thank you Ganesh for the introduction and making this happen. Really thankful for that. So I completed my Masters in Finance, MBA in 2012. Then I started my career journey in the finance. So earlier for six and a half years, I worked at S&P Global. In that I was catering to US clients, US entities on the big banks and NBFC side. Like so, I mostly look at their financials, investments, and solving their queries on that.
Okay.
With that, I started my CFA journey over there.
Okay.
I completed my level 1. Then after that, I worked at a couple of Indian companies in a project finance role, and I completed level 2 over there. And then I moved to valuation with the US consulting firm, which is Arcade LLP and a client of Staffing Global. Then in that I was working, and while working with them, I completed my level 3 and I become a CFA charter holder.
Okay.
With that, I completed my financial modeling and business valuation as well from CFI Canada, just to upskill myself.
Okay.
While remaining in the same organization, same role. In the valuation, I was working on private company valuation, startup valuation, ESOP valuation, purchase price allocation like merger and acquisition done, then how to allocate the tangible and intangible asset valuation, how to do that.
Okay.
Buy side, sell side due diligence projects also. With that, I became an active volunteer with CFA Society India. I'm still an active volunteer.
Yes.
So I work with Public Awareness Committee on that. So we handle all social media handles, LinkedIn, Insta, Facebook, YouTube, and to educate about the new conference, new webinars, new education material on the investment professionals, CFA aspirants.
Okay.
And I'm also part of the podcast committee. CFA Society India also published the podcast. I'm part of that committee. YouTube videos I'm part of. Recently, we also released a valuation theme newsletter as well. I contributed 2 articles and did 1 interview with the partner at EY working in the valuation side.
Correct.
Apart from that, during my free time, I also teach financial modeling, valuation, investment banking courses as well. And in March 25 also, I published my first book on business valuation.
Yes.
So this was my first book I published. We can talk about that later on as well.
Sure.
And recently, I joined SPA Capital Advisors as a Vice President, Valuation and Transition Advisory. So in that, now my role moved from the education side to the client facing and client management, project management.
Correct.
couple of members work under me in the execution side. So this is the broader level, like what I was doing earlier and what I'm doing right now.
Now, for the audience, if you can highlight what happens in valuation and what happens in transaction advisory.
Sure.
How is it different?
So yeah, it's a good question. I would say like many times people try to understand these both are different. So valuation is part of transaction advisory, I would say.
Okay.
So transaction advisory is a broader term. The transaction advisory, so in that you cater M&A, merger and acquisition, fundraise, or maybe startups and everything. For most of these functions, we have to do the valuation. So valuation is indirectly is the part of the transaction advisory.
Okay.
Transaction advisory, I would say it's a broader term. So that is the main difference. In my role, I work with the client, those who, like someone want to buy a company, someone want to sell a company and they have to do the valuation. So they reach out to us.
Correct.
We provide them merchant banker reports, IBBA registered value reports. So we do the valuation and help them to for the buy and sell. Any startup is there, they want to raise a fund. So investor asks like what's the valuation. So for to support that they need a valuation, so we help them. We also get mandates for the fundraise as well, like someone want to raise seed money for their seed stage bootstrap company, someone want to raise pre-IPO round, series C, series D. So we help the clients to connect with the right partners, with the right investors.
Okay.
So yeah, so transaction advisory is a broader term and valuation you can say it's a part of that.
Interesting. And when you're saying transaction advisory, it is basically right from the time you get the mandate, getting the data and then doing the entire valuation, getting the client with the respective money. It is end to end basically.
End to end, yeah.
Okay.
We categorize the work separately. Like valuation, we generally charge the fixed fees, like whatever we decide. For the fundraise and that, we generally charge for the success fees if the transaction happens successfully. So we categorize the work in two ways, but yeah, it is end to end. If the client comes to us, then we will try to make sure like whatever his requirement, we try to cater them fully, both on the valuation side as well and on the fundraise side as well.
One more thing which I wanted to understand, when we talk about valuation, okay, how is the valuation changes? I mean, for example, for M&A or for private entities, unlisted shares, how valuation would change or your methodology would change?
Generally, the methodologies remain most of the time same because we adopt global valuation standards, global valuation methods, like you name it, discounted cash flow or maybe comparables, transactions, sometimes book value method. So not change most on the methodology side, even whether we value any Indian company or global company. Yeah, but if the objective change, like suppose as you mentioned, like someone that's a startup, if he wants to do the valuation and suppose any listed entity, like right now, I have two projects. One is the startup, he want to raise money, he's a pre-revenue company. So for him, the data we will take, the details we will take, maybe the different, the investor we will cater, that would be different.
Okay.
Another one is a listed firm. So they want to sell a stake of 8 to 10%, founder want to sell stake 8 to 10%.
Okay.
And for that also they need a valuation. For the startup valuation or for doing the work and process, SEBI's some rules and regulation will not apply. So it's a small firm, startup firm, but someone is it's a listed firm, any company. So for we have to take their price, like what's the trading price.
Correct.
SEBI rules and regulations, 52-week, 26-week, high and low, that we have to take into consideration. So when objective change, private company to public company, startup company to mature company, then method sometimes remains same, but yeah, the process, what we do, the things we take care of,
inputs will also change.
Inputs change, outputs sometimes, but yeah, inputs and process changes.
And when we talk about the overall valuation, okay, one thing that any student's mind will be there, okay, how should I learn valuation?
Yes.
Okay. Now, especially students who are preparing for CFA, you have also done CFA.
Yes.
Most of the students, they want to enter into equity research, they want to enter into valuation. So if you can guide them, how should they start their journey and how should they scale?
There are many finance aspirants right now, specifically in India. They want to build a career like the valuations or maybe equity research. The first thing they can do, like not only focus on the education side, like CFA, FRM, AICA, these are the courses that can help them to get the opportunity. But suppose if you want to scale, try to work on more on the practical side. Theory is important, it's fine, but work more on the practical side, work on more projects, because practice will try to bring you more experience, like what to do, what not to do.
Okay.
where assumptions play a role. So over the period of time, you will understand how to take this forward. Like in the equity research right now, like as I told you, like I'm a active volunteer with the CFA Society India. So every year they do equity research challenge
Correct,
with the
yes.
global students, with the
Huh.
Indian students.
Huh.
So I work over there as a grader as well, as a mentor as well. This year I mentor IIM Raipur over there, their students. Like they can try to get into this kind of context, this kind of programs,
Okay.
not only with the CFA Society India or CFA Institute, but anywhere you get the opportunity. Initial years, I think students should focus on not on earnings, that will come gradually. Experience will bring you
Correct.
earnings and good compensation, but initially focus on building good practical knowledge. Suppose you sit in the interview, suppose you want to change a career, then your skills and knowledge will take you over there. So initially focus on like not only Indian valuation or equity research, but on the global side, do more and more practical, meet people, those who are doing this, try to get their experience, and over the period of time, your thoughts will change, your thinking will change, and that will help you to upskill in the or maybe enhance in the career
Correct.
side.
On LinkedIn, also a lot of students, what they do is they do reports or they do valuation of some companies and they post their report. From their side, is there any sector or anything that is easier to pick up just to start and then where they can move? I mean, they can do banking sector or anything.
Definitely.
So any specific sector that they can focus on?
Like as you mentioned, like this banking, infra, EV, these are some of the sectors which are not easy to get in, because banks,
Correct.
you know, like they have different reporting, required good knowledge of that.
Correct. It's very
Their income
complicated.
statement and balance sheet is completely different compared to you see some other sectors.
Correct.
Like suppose the auto company or maybe any fertilizer company, insurance company. Insurance company is also having some different reporting. So start with some easy sectors which has some like what you learned during your graduations or masters.
Okay.
So you can start with any auto company, take Maruti Suzuki, Tata, very standard reports, standard growth is there. Then fertilizers company you can start with,
Okay.
and later on move to some of the complex sectors.
So manufacturing is something they can start with. Easy.
Yeah, because and also start with the companies, industries, as well as like industries that are into the in India for very long time, like auto sector is there, manufacturing, fertilizers,
Correct.
right? Pick any company and it would be very easy for you to go through. Then you can gradually move to some difficult sectors or maybe some sector which requires some expertise, right? Banking, insurance, EV side you can move. Auto sector is also there, but you can move from Maruti Suzuki's valuation to the Ola Electric, which is recently listed, not profitable and struggling with to manage the operate. So you will get both flavor.
Correct.
Who will invest over here in Maruti? Who will invest in the Ola? Same sector, but sub-sector is different.
Correct.
So that I think you can follow, or someone like as a student they can follow.
Let us go more into the details of valuation part. Okay.
Yes, sure.
How many past year data? Okay, because we do forecasting
Yes.
for valuation. So how many past year data should we actually take
Okay.
to get a trend or get an understanding that how my costs are moving, how my revenue numbers are going to moving. So if you can shed some light. I mean, I'm not talking about how forecasting part. We'll talk about historical data.
Historical data. So generally, like we take 3 to 5 years is the minimum time frame you should look at.
Okay.
Unless and until like company is a startup company, pre-revenue company, then the
Data is not available. that
data
much,
is not available. But suppose it's a mature firm, listed firm. Listed may I would say not only just stick to 5 years. If you go up to 7 years also, then it's fine because you can get the audited reports.
Correct.
For companies investor relation page. As you mentioned, like see the revenue trend pre-COVID. Post-COVID also now you can analyze like it's a 5 years. Then you will see it will help you out to build the forecast.
Okay.
Like you are not just relying the recent number, recent growth, but you are seeing the trend over as well.
Correct.
And you can compare with the competitors. If it's a mature firm, listed firm, then you can compare. Like suppose I'm valuing Tata, then I can come Tata Motors. Then I can compare. I can check their historicals, pre-revenue, post-revenue.
So in terms of percentage, for cost, how much percentage of the revenue, I can compare along with the industry also.
Yes, I can compare in two ways. I can compare intra periods as well, year on year. Just say 2021, what's the EBITDA percentage? 2021 to 2022, what's the EBITDA? 23, what's the year on year revenue growth? And I can compare with other companies. Like suppose Tata Motors, direct competitors, Maruti Suzuki, Mahindra and Mahindra, Honda is also listed now. So I can compare. Then I can decide. Then I can suggest to the investors. Suppose I am investing, then I can take a call like whether I'm taking a right decision or not. So at least 3 to 5 years. If it's a private company, if it's a listed company, I would suggest generally 5 years is a standard
time
people
frame that
follow.
you have to take. Okay.
Not only for the historical, even the projected also. 5 years, everyone has in mind. This at least we have to do. But if you don't have, then at least go for the 3 years. Startup is a different scenario. But yeah, it's a listed firm. Then if you go up more than 5 years as well, then also you may be more comfortable in terms of revenue growth percentage, EBITDA, capex. In that you will get more idea.
Okay. Now, some practical questions.
Sure.
If I'm creating a model and I'm doing the forecasting for 5 years, can you tell me what are the top 5 mistakes which people do while doing this entire valuation?
So first of all, like linkages issue, like 3-statement model, like their capex is showing something and the debt is showing something else. Like they don't understand when company take debt, either they invest in the working capital,
correct,
in the capex. Working capital and capex, not that much movement, but that is increasing. So that sometimes like they are not. So first mistake, like interlinkage between the statements, they are not following. You should focus on that. Even I guide them.
Number 1. Okay.
Right. Number 2 is revenue, top line items. Revenue, EBITDA percentage, capex, debt and working capital. They are not following the historical trends, not seeing where industry is moving.
Okay.
Because for these top line items, you have to look at not only company's historical growth, you also have to look at the industries where it's moving. So that is the second thing. Third is reasonability. Many people are missing like whether my valuation looks reasonable or not. I checked one report in that Mahindra and Mahindra that and the trading price and the valuation he came up with 80%, 90% is the difference. Upside, downside, I'm not saying, but so you should understand like what you're coming up with, whether my valuation looks reasonable or not. Fourth is that again reasonability among methods. My DCF method show me 1,000 rupees intrinsic value. My comparable method show me 5,000. Too much difference. If you take the
you do multiple ways also simultaneously.
Yes, I think we should do. I would suggest just not only focus on one method.
Okay.
Discounted cash flow, comparables, but use combination of methods and also see whether all the method makes sense or not. That should not too much variability in that.
Right.
Like one method show 1,000, another one 5,000. If you just average and come up with the value 3,000, no, you will get a lot of questions, right? So this is the fourth one. Fifth one is that not only focus on numbers. Right now, what happens like people just focus too much on numbers. They start directly with the balance sheet, income statement. Just start looking that. Go back, check company's website. What company do actually? Look at their histories. Then you will get more comfortable. Read annual reports, 1 to annual reports. Try to understand what's vision and mission of the founders, where industry is growing. Because every industry's growth rate, every industry's factors are different. Like auto sector, fertilizer sector, their growth rate, government support.
All of this will matter, correct?
A lot of matters. So just hold back. Don't jump onto number first. Just check some of the background stuff. Just do some of the background work, homework, I would say. That no one actually, very few people want to do. They just want to do the numbers will do and will come up with the valuation. So these are a couple of things like top 5 I would say, like people are doing a mistake a lot and they should avoid going.
Correct. And when we generally hear about financial modeling as a term, correct me if I'm wrong, okay? It's primarily the Excel part, or it's basically the numbers part. When we talk about the overall equity research, which includes the financial modeling, we are doing the entire top-down analysis of the company. We are doing SWOT also, we are doing Porter's 5 Force also. We are looking at all of this plus coming out with the final number.
Yes.
Ideally. Now, you said that you have to read, you have to go and read the company's report and all of that. Yes. How much percentage, because you are already working as a VP, how much percentage of your day when you're doing this is into Excel or financial modeling, and how much percentage is reading at an overall level?
In my current role, it's more on a reading side, execution handled by another team. I just review that work. When I was working as an analyst, senior analyst, most of the time I was reading plus execution modeling, and that I've been doing.
Correct.
But right now, like I try to understand first the companies. I read the annual report, what are the transactions happened, go through the Cap IQ page or traction page, understand the companies, what are the transaction companies, who are the founders, and then I pass on the details to the execution team. Because sometimes they don't do that kind of research, because I have to connect with the client as well. Okay, you are giving me this valuation assignment, so I also want to understand who is giving me the assignment, what's the purpose. Then I do the meeting with them, what's their expectation, what they want to do, what's the time frame at which they expect us to close this. So most on that side as my role currently, and then I pass on to the execution team, try to arrange a meeting as well if needed. needed and back and forth. So I'm like bridging the gap between the execution team and the client, serving on that part as in my current role. Earlier I was working on more on the execution side, someone else is handling the client part. So that is the shift recently I did in my career.
Wonderful. When we talk about the execution team, what are the key skill set, if you can talk about 3 or 5, that they should have when they are actually doing the valuation, actually creating the report?
So 3-4 things, like they should be thorough with the numbers and with the reasonability, what I told you. Just hold back, check like whether any formula error you not made or whether you not missed anything which provided by client. Because sometimes what happen, client come to us like we already provide you to these things you have not taken into consideration. So that is something like on the quality part question comes. If we want to bring a recurring revenue, clients should trust us, clients should see like we delivered a quality work, so we should avoid this kind of things. So 3 things if you say, then I would say focus on everything, not only numbers, what client provided the data. Take some time, go through that. If you have any question, come up with the questions and ask to the clients. Another thing is learn from your mistakes, like what you did in the past project and how should I avoid that going forward. I actually learned through this thing. I'm still learning, I would say, because we have to deal in numbers day in, day out. Sometimes we miss the client comments of what they did that. Then how to avoid that going forward. Then only experience comes in. If you don't change the mistakes you did earlier and not improve in that, then you cannot expect change to come in your work and in your role. So that I focused on, and that only I'll just suggest to those who are doing the execution side. Third thing is like try to take new opportunity, new work. Because over the period of time, suppose I work on M&A, if I get new project after 3 years, ESOP valuation or maybe goodwill impairment valuation, and I have not experience, then someone will say like you are working in the valuation from last 3 years, then you should take the opportunity, you should have some knowledge. So try to get new opportunity, new challenges, new work, so that when you go in the market or you want to upskill, you want to demand a promotion, then it will be very easy for you.
Wonderful. I have a few questions with respect to students who are looking at long-term career in valuation. How will the valuation role evolve in the future?
Right now, like AI is the talk of the town. There are many AI tools. They directly build the model, can give you the cost discount rate as well, and you can incorporate, right? But that can support you. So this will evolve going forward, definitely. So now whatever we are doing, most of the things manually, AI tools can support us, can guide us. We cannot rely on it 100%. That is the separate, because valuation at the end is the human judgment is required. So that is there. But yeah, it will evolve. So more and more technology, machine learning, AI tools you will use. I'm not talking about ChatGPT and Gemini. I'm talking about some of the tools which are specifically building the entire model and also doing the valuation. I can name a few as well. Fiscal.ai, if you want to check.
Fiscal.ai,
that is doing that work. Couple of them are there. That is going to evolve going forward. Another one is, now people are not interested to just know the number. They want to see the story. They want to see the transition. Like suppose I did the valuation, suppose someone want to sell a business, right? Then when I met the client after doing the valuation, they asked me, valuation it did is fine. How this can support us to sell the business? What are the industry multiples? You not covered here. Can you give us separate some details, some industry research? So your valuation should also back by some industry research. That is the demand. Now numbers is fine. You did that, but how it support, how it backed, how it's reasonable. So that is going to be going forward. And nowadays there are a lot of new roles comes in, like AI valuation specialist is there. Those are also doing the research with the AI, doing the number work. Earlier there was just valuation analyst. Now valuation specialist, AI or maybe machine learning, that may be part of the valuation role. Not just focus on numbers. It's a broad game now. Many people are there. We know we are living in the most populous country in the world, so a lot of competition is there. So someone want to, as a student, they should take both technology, numbers and reasonability together to build a successful career in the valuation or equity research, I would say.
How valuation decisions are actually made. So I have a few questions. So as a VP, how do you judge assumptions? Suppose there is an execution team who has come out with the report, 10 assumptions, especially with respect to discount rate. How do you challenge that?
So first of all, case to case is different. Like suppose small company, startup company, for their risk are different, the industry they are in, they are different. So generally I ask the questions, I judge the assumptions, like what are the risk factors, what they did so far, what's the leverage, what's the growth rate, then accordingly we can take risk into consideration, even in the growth rate as well, not only in risk, but suppose revenue growth we take into consideration, long term growth rate we take, a lot of assumptions are in the valuation.
Correct.
So as a leadership role right now, my role is to guide them, like how to take this into consideration, where you can source the data. Suppose we have any different views, then because here see most of the things are subjective, right? Someone say like long term growth rate, I think it's a 5% of this company, I may say like it may be 4%, then we have to debate on that as well. So I encourage them like come up with your reasonable, come up with your thought points, not just like what others are following. Like
Correct.
standard is, there is nothing standard when it's come to assumptions, right? It's changed from company to company. There is nothing standard like I have to take 5% growth rate, long term growth rate, I have to take 5% risk rate. So that is different. So that we have to think in a broader level, and objective is also different. Like suppose fundraise for that valuation, and merger acquisition for that valuation, listed company valuation, company to company it's change, and objective to objective it's change. So that I try to make them understand like how to go through the, because I followed that process, I worked on multiple area, so that only I try to discuss with them.
Okay, wonderful. Now, how important is communication in your field? So I have a few questions. Suppose your team has executed, you've got the numbers, now you're going to client and talking to them. How do you convince them?
Yes.
Okay, that is,
That is
very
the difficult
interesting.
one.
Ha.
Sometimes, because that is here the real experience, actually I would say what we learned so far that comes in, because many times they are expecting some different results, them different output, not in that expectation, and they want us to change something. So we have to educate them, we have to, like what you mentioned, the word convince them, or try to make them understand like why we come up with this output, why this cannot be changed, or why this can be changed. Like I can give you one recent example, like the company which we were helping to do the valuation, because he want to sell a business, debt piled up and new generation comes up, so he was expecting some figure, let me give, like suppose 40 crore. We came up with the 37 number.
Okay.
Now he's thinking like, okay, now this will like not help me to bring the investors or the buyer.
Correct.
Then we try to make them understand, you quote 40, 45, that will not convince the investor. But suppose something comes up from the valuation side, because as a business owner, he don't understand these methods, this calculation, this comparable that we do. He just has the figure in mind. So we have to make them understand, just quoting the number will not help you, but backing by some reasonableness, that will help you.
Okay.
Right. So that is the one thing. Another case I can say, like someone with the numbers he's okay. As a disclaimer, we added some over there. So he thought like, can we replace these wordings and this? Then we have to make them understand these are the IBBI registered valuer guideline. We cannot change. And if you want some modification, we can. So we have to cater these requirements, these suggestions, how to manage their emotions as well. But yeah, as a leadership role, that's a part of our life. Earlier I was doing the execution, so I just work on them, but right now I'm learning on that side, and it's a interesting thing, I would say, just to deal with them, with their emotions, with their thinking, convince them, convey your thoughts. It's actually the leadership role, I would say.
All my major queries have been covered. I have one last section, which is the rapid fire section. I'll ask you a question, you have to answer fast, okay? One skill student must master first.
Advanced Excel.
Biggest beginner valuation mistake.
Focusing on numbers only.
What recruiters notice first.
Communication skills.
Advice to valuation aspirants.
Look for the long-term growth.
What makes a CV stand out.
Your experience and education, you can convey in just one page.
Excel skill, every analyst need.
That your advanced Excel formulas, VLOOKUP, HLOOKUP, or maybe if and joint and this kind of formula. If you are interested, then if you learn the VB codings as well.
How this book, your book, can help and guide students? If you can give some 2-3 lines on that.
Definitely. So actually I wrote this book as it's for a beginner's level. Someone just want to understand, like suppose someone is from not a finance background. Someone is a lawyer, someone is an art student.
Okay.
And he just want to understand what are some terminologies, what are some methods in the valuation. So that is the book for, but it's also for professionals as well. Like suppose someone is a graduate, master's, but want to learn valuation. So I try to cover over here. And first of all, it's a self-published book. I just published through Amazon's KDP platform. And first book, but received good response so far from the readers.
Right.
Not only in India, I published in 11 other countries through the Amazon's platform. So this book actually guides students, like someone want to learn what are the basic methods in the valuation, what are the reasons to do the valuation. So two things I try to cover: methods, practical side, and when someone do the valuation, like suppose for the M&A, if they want to do goodwill impairment, they want to do ESOP valuation, they want to do. So these two things I try to cover in the crisps, not that too many words is there, but
very simple.
Yeah.
The size is not very lengthy.
Yes,
Kept it very simple.
Yeah.
I'm sure a lot of people who are going to watch this interview and they are planning to look at the evaluation, this book can help and support them in their journey.
Thank
so
you.
again, Siddharth, thank you very
Thanks
much
a lot. It's
for
a
taking out
pleasure
time.
talking to you and having this discussion. Thanks a lot.
Thank you.